Hello.
Okay, okay. Welcome back, guys. Okay, I guess we never met each other. What? What to do right now? That's the trend. Okay, can you see my face? Can you see me? At least you can
Yes,
see me.
I can see your face and
Okay.
the PPT.
I can take
Okay.
your PowerPoint.
Okay. And what about the PowerPoint? Can you see the PowerPoint?
Yeah, I can
Okay,
see.
Yes.
that's great. Okay, guys, we're gonna start our class right now. And I will mute you, okay? I will mute you, but if you have any question, anything, you can unmute yourself and ask me a question, yeah?
Mm,
Okay, is it okay?
okay.
Okay.
It's okay.
Okay, guys, today we're gonna go through the financial management core concept, the fourth edition. This book is by Mr. Brooks. But you can refer, if you want to buy a book, you can buy the other book that I mentioned to you. Okay, what we're gonna see throughout this lecture today, these are the learning objectives. Describe the cycle of money, the participants in the cycles, and the common objective of borrowing and lending. It means that where the money come from, where does it go, who uses the money, what's the usage of the money. Distinguish the four main areas of finance and briefly explain the financial activities that each encompasses. And when we talk about finance, what does it mean at all? What are the different areas of finance? Explain the different ways of classifying financial markets. Discuss the three main categories of financial management. This module is called Advanced Financial Management. Later we need to know that what is financial management. And identify the main objective of the financial manager and how that objective might be achieved. Because later you would become a financial manager, okay, but what's your role? What you're gonna be doing in the company? Or why the company needs to hire you even? Yeah, that's a question that needs to be answered. Explain how the finance manager interacts with both internal and external players. What does that mean? It means that you need to interact with the people inside the company as well as you are responsible to answering the shareholders' questions and the inquiries. Delineate the main types of business organizations and their respective advantages and disadvantages. Illustrate agency theory and the principal agent problems. Define issues in corporate governance and business ethics, and explain why studying finance improves your employability, okay? These are some of the things that we're gonna see today. And whenever, guys, I ask a question, please answer the question. At least we can interact, yeah? Otherwise, the class would be boring. Are we okay with that? Hello? Hello? Lee, wrong, wrong.
Hello,
Yeah, hello.
I'm okay.
Okay. Yeah, I said that whenever I ask a question, please try to answer the question. Yeah, no worries if the answer is wrong, right. If you're
Yeah,
unsure, it's all okay. Try to interact, try to engage in the class. Otherwise, the lecture would be a bit boring. Yeah, okay.
yeah.
Okay. Okay, definition of finance. Many of you are studying finance or accounting, but what is finance? Why do we need to learn finance? This is a definition for it. Finance is the art and science of managing wealth.
Mm,
It's about making decisions regarding what assets to buy, sell, and when to buy and sell these assets. Okay,
mm,
can you name some of the assets available to us?
mm.
Some of the financial assets, like what?
Uh,
Shares, bonds, gold, property, cryptocurrency, all these are called assets, isn't it?
Yeah.
They are assets or different asset class. Finance help us to do an investment, isn't it? We want to make decision that we need which investment is better, to buy shares or to buy bonds or to buy property, for example. Then how are we gonna do that? We're gonna use finance in order to evaluate the different assets. And also finance can help us to enter into the financial market at the right time. What does that mean? It means with the help of a finance, we can find a right timing, for example. For example, these days, due to the coronavirus, share price drop, becomes so cheap. Then that would be a right time in order to enter the finance market, yeah? And also, its main objective is to make individuals and their businesses better off. What do you understand from this sentence, guys, here? Guys?
This assess to buy or sell in a market.
Okay. It means that we are looking for a high return, isn't it? Finance can help us to buy an asset with a better return, higher return, and lower risk, yeah? These are the definition or usage of a finance for us. Okay. And okay, right now, what is financial management? Financial management is generally defined as those activities that create or preserve the economic value of the assets of an individual, small businesses, or corporation. Financial management comes down to making sound financial decision. Okay. What do you understand from this sentence?
The financial management can help company to cooperate.
Okay, what does that mean? It means that if you have a company and if you want to buy a new machine, new equipment, then should you buy it or no? If you do not buy it, what is the consequences? If you buy it, what is the consequences? Then financial management can help you to make a better decision. If you make a good decision, then the value of your company or corporation gonna increase. Yeah, that is the role of financial management. It means managing the finances, actually.
So you can
Okay, a cycle of...
to regulate.
Sorry, what is that? Okay, the cycle of money. Financial intermediaries assist in the movement of money from lenders to borrowers and back again. This process is termed as the cycle of money, and its main objective is to make all the participants better off. Can you name some of the financial intermediaries? Okay, if you want to borrow a money, if you want to lend some money, what you gonna do? Where you gonna go?
Go to a financial intermediary.
Intermediaries means, for example, financial intermediaries is a general name. Under the financial intermediaries, we have, for example, banks. Yeah, we have banks, for example. And do you see the slide, guys? Can you see the slides?
Yeah.
Yes.
Okay, that's good. Yeah, financial intermediaries, one example for the financial intermediaries is bank, for example, insurance company, bank. There are many different financial intermediaries. What is their role? The role is connecting lenders and borrowers to each other. Yeah. And this is how the cycle of the money works. It means that some people have extra money. What they gonna do with their extra money? They deposit that extra money in the bank and they receive some interest. But what bank gonna do with that money? Bank gonna lend it to the borrowers. Okay, and borrowers will borrow that money from the bank and gonna pay some interest to the bank. This process is called cycle of money. So you can see it here. See, borrowers, lenders, and they're connected via the banks, for example. Zhang, your side is a bit noisy. What is that sound actually?
Maybe it's my roommate.
It's a bit disturbing actually. Can you, I don't know, reduce it or do something about that?
Yes, I'll find the. Okay, please.
Okay. Thank you. We're gonna guys, if you got any question, ask. Yeah. Okay. There is an example. The money cycle. That a mutual fund issues shares which are bought by individuals. The pooled funds are invested by the mutual fund companies in shares that are issued by firms. The firms pay in the dividends periodically which are received by the mutual fund and passed through to their shareholders or reinvested in additional shares, and the cycle of money starts again. See, this is one example that how the cycle of the money works. See, in between, the mutual fund manager earns some fees. The firms whose securities are bought are able to raise capital for growth and future returns. And the mutual fund shareholders earn dividends and capital gains. Thus, all participants are generally better off. See, via the cycle of the money, everyone would be benefited. Yeah, everyone would get some benefit in between. And that's the role of finance and financial management and the financial manager. Okay, overview of finance areas. Guys, when we talk about the finance, what are the different areas of the finance? Any idea?
Finance company.
No, finance company is not a finance area. When we talk about bank is not a finance area really. What can you do with finance? That is the meaning of that. Okay, see, 4 main interconnected and interrelated areas under the finance areas are corporate finance. Have you studied the corporate finance? It's the area of the finance. And what is corporate finance? Corporate finance deals with the financial activities that support the acquisition, investment, and repayment of capital. Okay. It means that if you have a company, for example, if you want to buy a new equipment, if you want to do some investment here and there, then you need to use corporate finance. Another finance area is investments. Investments involve the activities centered on the buying and selling of financial assets, such as stocks and bonds. This is called investment. It's another area under the finance umbrella. The third area is financial institutions and markets. It's connected with organizations, functioning and activities of financial intermediaries and forums that promote the cycle of money. For example, banks, insurance company, mutual funds, and all comes under the financial institution and markets. And the last area of the finance is called international finance, which adds the element of multinational dealings, country risk, and exchange rate conversion to the other three areas listed above. For example, you see there are Subway, there are McDonald's, there are KFC, there are Mango. See, they are all international companies. And then they need to use the international finance in order to manage their finances. Why? Because they are dealing with different currencies, isn't it? And they are dealing with different countries as well. Then they need to go through the international finance in order to manage their finances. Yeah, these four are called different areas of finance. Any question up to here, guys? Are we okay?
So all international company is finance area.
What do you mean by that?
International company.
No, international.
Like like technology company.
Okay.
Is financial area.
No. See, when we have a, for example, we have a technology company like, for example, Huawei. Okay. In their company, they can use all these four areas of the finance. For example, Huawei wants to buy a new equipment for the 5G technology. Okay. Should they develop that idea or no? That comes under the corporate finance. They need to make decision. Okay. For example, Huawei wants to invest in one American company, wants to buy the share of one American companies. Should they buy the share of that particular American companies or no? Then that comes under the investments. For example, Huawei wants to borrow some money from the bank. Okay, then that comes under financial institution and markets. They need to go through the banks, they need to deal with the banks, and they need to negotiate on the rate of the borrowing. All this stuff comes under the financial institution and markets. And for example, Huawei wants to open a branch in Malaysia. Then they need to study the market. They need to know that does it worth to open a branch in Malaysia or no? Then that comes under the international finance. See, it means that under one company, you can have all these four different areas of the finance. Four different departments actually under the finance. Okay, is it clear?
Yeah.
Okay, thank you. Okay, let's talk about the financial markets. Forums where buyers and sellers of financial assets and commodities meet. See, the name is markets, financial markets. It means that if you want to buy some financial assets, if you want to sell some financial assets like shares, bonds, cryptocurrencies, if you want to borrow and lend some monies, then you need to go through the financial markets. In general, it's called financial markets. Okay. Financial markets can be classified by types of asset traded. Yeah, means that if you want to buy a share, you need to go to the share market. If you want to buy a bond, you need to go to the bond market. If you want to buy a cryptocurrency, you need to go to the cryptocurrency market. And another classification of financial markets is maturity of the financial assets. Money market, capital market. Do you know what is the difference between money market and capital market?
Is money market is cash and capital market is Oh, I don't know.
Okay. If you want to borrow a money, if you want to buy any financial asset which a maturity is less than a year, it is called money market.
Oh.
Okay. If you buy a bond or T-bill, treasury bond, which the duration is the expiry date of that treasury bond is, for example, 6 months, 9 months, then it is called under the money market. Or if you get a loan, for example, which is less than a year, you get a loan for 10 months, 9 months, 8 months. We are referring to the money market. If you buy any financial asset, which is the maturity of that financial asset is more than a year, it's called referring to the capital market. Okay, that's the difference between these two. And another classification on the financial market is owner of the financial asset, primary market and secondary market. Do you know what's the difference between these two? Okay, see, if a company is a private company, decides to become a public, decides to become a public listed company, what they need to do, they need to issue some new shares, isn't it? They need to issue some new shares to the public. That is called primary market. The first time that a company issues shares to the public is called
Stock.
IPO, initial public offering. We are referring to the primary market. When the company issued a share to the public can buy and sell the shares among themselves, isn't it? Right now, if you open an account, you can buy and sell the share of the McDonald's, Subway, KFC, Burger King, isn't it? Then when you buy and sell the share among other shareholders, we are referring to the secondary market. Okay. Another classification under the financial market is dealer markets and auction markets. Okay. Here is about the financial manager and financial management. Finance manager, what's the role? What they're gonna do? Finance manager has to determine the best repayment structure for borrowed funds. See, these are the role of the finance manager. If you become a finance manager, you need to make sure that if you get a loan, how to pay back the loan. And you need to find a cheapest loan, for example, that pay a lesser amount of interest on that loan. That is your duty. A finance manager also should make sure that debt obligations are met on time. Okay. And also finance manager needs to ensure that sufficient funds are available for carrying out daily operation. It means that finance manager need to manage the cash flow, cash in, cash out, everyday activities. Finance manager needs to manage the net working capital of the company. Okay. Any question up to here, guys?
So if not repaired, it's still into the accounting.
I didn't get your question. Sorry.
And if not repaid, it's directly into the accounting.
I can't really understand your question. What is your exact question?
It's okay. It's a small question. I'll ask you the.
Okay, if you can. Okay. See, finance and accounting are related to each other. We cannot separate the finance and accounting. Yeah. Okay, the finance manager and financial management. Financial management involves three main functions, yeah? Financial management. You need to do the capital budgetings, capital structure, and working capital management. Do you know what is capital budgeting? Capital budgeting actually is the process of planning, evaluating, selecting, and managing the long-term operating projects of the company. As you remember, we said that if you want to buy a new equipment, if you want to run a new project, then should you be doing it or no? You need to evaluate it. You need to decide on that, isn't it? You need to plan for that. That falls under the capital budgeting. How about the capital structure? Capital structure means by which a company is financed, and for public companies is usually a mix of stock and bonds sold to investors and owners. It means that if you have a public company, if you have a company, need an extra finance, extra, then where you gonna get that money? You can issue shares, you can issue bonds. Which one is better? Which mixture of these two? How much you need to how much of your capital structure should come from the stocks? How much of your capital structure should come from the bonds? That comes under the capital structure decision. And the third category is working capital management. Means managing the day-to-day operating needs of the company through the current assets and current liabilities of the company. This is often referred to as the short-term financing activities of the company. Yeah? Any question up to here?
No.
Okay.
No.
We move on. Objective of the finance manager. When there is a finance manager, what the finance manager is supposed to do? What is his or her objective? To make investment and financing decisions that increase the cash flow of the firm, thereby maximizing the current stock price. That is the main objective of the finance manager. Means profit maximization versus stock price maximization. And why are they not the same? Which one is more important? Are they the same, profit maximization and the stock price maximization? Is it important?
Yes.
And which one is more important? Stock price maximization is more important than the profit maximization. Yeah? Okay, internal and external players. Financial managers have to interact with various internal and external stakeholders. Who are stakeholders of the company, guys? Tell me. Internal players include all the departmental managers and other employees. See, whoever works inside the company is called internal players, or they're called internal stakeholders. But companies interacting with the outside world as well, isn't it? Then external parties include customers, suppliers, government, creditors. They are called external stakeholders. Yeah? And the company needs to take care of internal and external stakeholders. And the finance manager also needs to take care of internal and external stakeholders. Okay, if you work in a company, this is the called normal organizational chart.
Mm.
There is a CEO. Under the CEO, the finance manager would be, and under the finance manager, there would be a treasurer, controller, and the investor relations officer. Yeah, this is how usually works in a different companies. The legal forms of business. There are three main legal categories of business organizations: sole proprietorship, partnership, and corporation. It means that when you want to open a company, establish a company, what type of a company you're supposed to open? You can decide on that, isn't it? Usually there are three different types: sole proprietorship, partnership, and corporation. Later we're going to see that what's the difference between these three types of companies. Besides these three main forms, some other forms of business organizations include hybrid corporations and not-for-profit corporations, or in general we call it NGOs. Okay, if you open up a sole proprietorship company, there are some advantages and disadvantages to that. Let's see the advantages. Is simplest and easiest forms of business. Least amount of legal documentation is needed, least regulated, and owner keeps all profits. There are some disadvantages to the sole proprietorship as well. Owner pays personal tax rate on profits. Obligations of the business are sole responsibility of owner, and personal assets may be necessary to pay obligations. And business entity limited to life of owner. Okay, another form of the business is partnership. Of course, there are advantages and disadvantages to that. Advantages is agreements between partners may be easily formed. Investor involves more individuals as owners and therefore usually more expertise needed, and larger amount of capital usually available to the business when we compare it to the sole proprietorship. Disadvantages is that assets of general partners are commingled with assets of the business. Profits treated as personal income for tax purposes. Okay, the third form of the business, if you want to establish, is corporation. Advantages and disadvantages. Business is legal, separate entity from owners. That is important. You see, that is the biggest difference of the corporation from the partnership and the sole proprietorship. Owners have limited liability to obligations of the business. Easy to transfer ownership, usually greater access to capital for business. Owners don't have any personal liability for default. It means that if the company goes bankrupt, the law not going to come and confiscate your home. That's the meaning of number 5. And what is the disadvantages of the corporation? It's most difficult business operation to form. Double taxation of company profit and is most regulated. What is the meaning of double taxation of the company profit? It means that every year company, whatever profit they make, they need to pay some tax to the government. And the remaining profit can be distributed among the shareholders. When shareholders receive the dividends, they also somehow need to pay tax over the dividends. That is the meaning of double taxation. Okay. The financial management setting, the agency model. Agency relationship, agency conflict, what does it arise? Why does it arise? How can it be minimized? Principal agent problem, agency theory, and agency cost. Guys, what is the meaning of agency problem, agency relationship? Any idea? Have you heard of that at all? Hello?
Yes.
Okay, what is that? Okay, never mind. I go through and explain it a bit for you. The relationship between the owner or principals of a corporation and the manager or the agents who are appointed by the owners to run the corporation is termed as the agency relationship. Yeah, means the relationship between the managers and the shareholders. The very nature of such a relationship is fraught with opportunities for conflict, agency conflict. Since owners want higher stock prices while managers, who are empowered to make the key operating decisions, can often stray away from their main goal of maximizing shareholder wealth and grant themselves excessive perks or high salaries or pad their officers with luxuries carpets, much to the dismay of the shareholders. The problem of motivating managers to act in the best interest of shareholders is known as the principal agent problem. Some methods that can be used to minimize agency conflicts include supervision, outside audits, and performance-based compensation contracts such as stock option plans and bonuses tied to earning per share. Agency theory is the name given to the processes surrounding recognition of the principal agent problems and ways to align agents with the interests of the principals. Costs to align the agents above a straight effort contract or ensure performance at the contractual level are agency costs. Okay, corporate governance and business ethics. Corporate governance deals with how a company conducts its business and implements control to ensure proper procedures and ethical behavior. For example, one of the governments and business ethics in US is called Sarbanes-Oxley Act, enacted in 2002, which requires the CEO and CFO attest to the fairness of the financial report. Each country can have its own corporate governance and business ethics, but it's really important to adhere to the business ethics. Okay, here says that why study finance? Because we need to understand how and why financial decisions are made in large and small companies. And it's gonna help individuals increase their own compensations. Also, it can improve contributions to the success of the companies that people work for. And understand the trade-offs we face in making personal financial choices and help us to select the most appropriate action. Okay, guys, we have ended the chapter 1. Do you have any question up to here?
No.
Okay. Miss Wrong, R-O-N-G, Wrong You, are you around?
Wrong you.
Is she around? Guys, whenever I ask you a question, if you're not answering the question, I would put a absent for you, yeah? Please attend the class. It's not just log in and go away. No. Where is Wrong You? I can't see her or... Okay, Wrong You, can you answer my question? Introduce yourself or just say hello? And guys, in order to be able to listen to the classes, you need to fix your microphone. Yeah, please make sure that your microphone and your camera is working properly. Okay, guys, do you hear me?
Okay.
Yeah, please, all of you, three of you, make sure that your camera and the microphone works well. Okay, guys, let's have 10 minutes break and come back to the class again. Is it okay? See you at 4:30. Okay?
Okay.
Okay, thank you, guys.
Okay.
Thank you.